Welcome to the deep dive. Today, we're diving headfirst into the world of Indian Railways, specifically the financial performance of the Indian Railway Catering and Tourism Corporation Limited, or IRCTC, as they like to be called. Think delicious train meals, convenient online ticketing, and exciting travel packages. That's IRCTC. We've got their latest quarterly report hot off the presses, and some insightful analyst questions to help us unpack it all. And get this, they declared a dividend despite some ongoing legal battles. Intriguing, right?
It definitely caught my eye. Let's see if we can unravel that mystery as we dig deeper.
Okay, let's set the stage. IRCC dropped their unaudited financial results on November 4th, 2024. For those not familiar with Indian currency, 1 lakh equals 100,000 rupees. And we're talking big numbers here. Revenue from operations hit a whopping 106,399.61 lakhs for the quarter and 218,158.52 lakhs for the half year.
And their profit after tax from continuing operations, a cool 30,781.80 lakhs for the quarter and 61,549.47 lakhs for the half year. It's clear they're making some serious money.
Absolutely. And then there's that dividend, €4 per share, which is double their paid-up share capital. To understand the impact of these numbers, let's rewind a bit. How do these figures compare to the previous quarter and the same time last year?
Well, if we peek back at Q1 of FY25, their revenue was 111,758.91 lakhs. So, while the current quarter is strong, there's a slight dip, but when we compare it to the same quarter last year, Q2 FY24, which came in at 99,240.06 lakhs, we see significant year-on-year growth.
That context definitely helps. Now let's break down where this revenue is actually coming from. IRCTC isn't just about train tickets anymore, is it?
Not at all. They've diversified into 4 main segments: catering, those tasty meals you get on trains; rail near, their bottled water business; internet ticketing, which we all know and love; and finally,
tourism.
So,
Are all these segments contributing equally to the revenue? Spill the tea.
okay, here's the breakdown for Q2. Catering brought in 48,195.96 lakhs. Rail near contributed 9,021.98 lakhs. Internet ticketing generated a significant 37,095.6 lakhs. And tourism added a respectable 12,444.96 lakhs. What jumps out at you?
Well, internet ticketing is still a powerhouse, which isn't surprising. But I'm intrigued by the tourism segment's performance. You'd think with all the ups and downs in the travel industry, they'd be struggling.
Yeah.
But they seem to be holding their own.
You've hit on a fascinating point. The analyst questions actually encourage us to think about shifting consumer behavior and how IRCTC is adapting. For instance, domestic travel is booming in India.
Right.
And it seems like IRCTC is strategically tapping into that demand.
Smart move. Now,
Oh,
let's talk about their profitability. What's their net profit margin looking like? And for those of us who aren't financial wizards, could you break down what net profit margin actually means?
think of it like this. Imagine you sell lemonade for €100 and it costs you €70 to make. Your net profit would be 30, and your net profit margin would be 30%. It essentially tells us how much profit a company keeps for every rupee of revenue they generate. Now, in IRCTC's case, they're doing a pretty good job of turning revenue into profit. But there are a few factors impacting that margin, both from within the company and from the outside world.
The analyst questions mention things like cost management strategies, inflation, fuel prices, things that can really impact a business's bottom line. How are these elements playing a role in IRCTC's financial performance?
Let's start with cost management. IRCTC has implemented several strategies to keep those costs in check, and you can see the results in their financial reports. For example, their expenses of catering services in Q2 FY25 were 34,646.43 lakhs, down from 39,419.90 lakhs in Q1 FY25. This suggests that they've found ways to be more efficient in their catering operations.
That's impressive.
Yeah.
Especially when you consider the external pressures they're facing. Inflation has been a global headache, and fuel prices are notoriously volatile. How is IRCTC navigating these choppy waters?
Oh, well. These external factors are definitely putting a squeeze on their profitability. Think about fuel prices. The cost of running those trains has a direct impact on IRCTC's operational expenses, particularly for their catering and tourism segments, in fact. Their expenses of tourism rose to 10,501.93 lakhs in Q2 FY25, from 9,505.93 lakhs in the previous quarter. That increase could very well be tied to rising fuel costs.
So it's a bit of a balancing act for them, trying to manage internal costs while being hit by these external factors. But despite all this, they still decided to declare a dividend.
That's what makes it so intriguing. This move suggests that even with these challenges, They're confident in their financial position
Right.
and are willing to reward their shareholders. It's almost like they're sending a message, isn't it?
It definitely raises some eyebrows. And speaking of challenges, there's another piece of this puzzle that we need to address. Those legal battles you mentioned earlier.
Ah, yes. The financial report notes highlight some pretty significant disputes that could have a real impact on IRCTC's financial future.
Well, let's dive into those legal tangles. These reports can be a bit dry, so let's try to make it a little more relatable for our listeners. How might these legal battles affect them as consumers? What's the real-world impact of all this?
Excellent question, you see. These legal challenges could actually trickle down to your experience as a passenger. For example, let's start with the dispute over increased license fees for catering services on trains. This dispute stems from a move by the Railway Board back in 2019. They issued a commercial circular, CC60, which basically hiked the prices for catering on both prepaid and postpaid trains. This meant IRCTC could potentially collect more in license fees from the companies providing food on those trains, but some of those companies weren't too happy about this and decided to take the matter to court.
So, because of this legal battle,
Yeah.
IRCTC can't count on that extra income from the higher license fees. What's the potential financial impact here? Well, the financial reports don't disclose the exact figure, but they do mention that they haven't been able to recognize the potential revenue from those increased fees since November 2019. So
Yeah.
it's been a while. If IRCTC wins the case, it could mean a significant boost to their revenue.
Yeah.
But if they lose, well, it's a missed opportunity, and they might have to look for other ways to make up for that potential income.
And that could translate to higher prices for food and beverages on trains, right?
Certainly a possibility. They might need to adjust prices to compensate for the lost revenue.
Okay. Next on our legal adventure is a dispute related to Rail Near, their bottled water business. It involves something called input tax credit data. Can you break this down for us in a way that even someone who doesn't speak finance can understand? Imagine you're baking a cake and need flour, sugar, and eggs. You pay tax on those ingredients, but when you sell the cake, you can claim back some of that tax you paid on the ingredients because it's considered input tax credit. Now, in IRCTC's case, they have 4 Rail Near plants operated in partnership with private companies. As part of the deal, these partners are supposed to reimburse IRCTC for the tax they paid on Rail Near supplies, minus any input tax credit they've claimed. But it seems there's been a lack of transparency regarding the input tax credit data from these partners.
So IRCTC is basically saying, hey,
Yeah.
show us the receipt so we know how much tax credit you've actually claimed.
Exactly. The reports state that complete information about the claimed input tax credit isn't available, leaving IRCTC in a bit of a bind. They've accounted for 195.67 lakhs during the half year based on the limited information they have. However, these partners are contesting IRCTC's claim, leading to another legal tussle.
Okay, that's 2 disputes down, 2 more to go. What's the next legal challenge on our list?
This one's a bit spicy. IRCTC is facing allegations of profiteering related to Rail Near pricing, essentially. They're being accused of not passing on the benefits of a tax reduction to consumers after the implementation of GST in July 2017.
Wait, so they're saying IRCTC kept the extra profit from the tax reduction instead of lowering prices for consumers? But Rail Near prices seem pretty standard, don't they?
That's IRCTC's argument. They claim that Rail Near falls under a controlled price segment, meaning the maximum retail price is fixed by the Ministry of Railways. And that price hasn't been updated since 2012, even though costs for raw materials, power, and everything else have gone up.
So it's like they're stuck between a rock and a hard place.
Yeah.
The price is fixed, but their costs have increased.
Precisely. And to add to the complexity, this case has now been transferred to the Competition Commission of India, or CCI, for adjudication. We'll have to wait and see how they rule on this one.
All right, that's 3 legal challenges down. What's the final hurdle IRCTC is facing?
This last one involves a group of licensees who provided catering services on trains for IRCTC. They weren't happy with certain aspects of the payment structure and decided to take IRCTC to arbitration.
What were their specific grievances? Did they feel like they were being shortchanged?
There were a couple of key issues. First, they claimed there was a discrepancy in the rates for regular meals versus combo meals specified by the Railway Board. They argued they were being reimbursed at the lower combo meal rate even when they were providing regular meals. Second, they claimed they weren't being paid for those welcome drinks they offered passengers, again, based on a Railway Board circular.
Sounds like they were dotting their I's and crossing their T's when it came to getting paid. What happened with the arbitration?
The arbitrator awarded these licensees a total of 7,471.65 lakhs, covering 13 petitions for services provided between January 2015 and March 2020. However, IRCTC contested this award, arguing that the ultimate responsibility for these costs lies with the Indian Railways, as they set the pricing structure in the first place.
So it's a bit of a blame game, with IRCTC essentially saying, hey, it's not our fault. The railways set the prices. What happened next?
Things got a bit dramatic. The Delhi High Court, in an attempt to pause the execution of the arbitration award, ordered IRCTC to deposit the awarded amount. They complied by providing a bank guarantee worth a whopping 8,471.65 lakhs. But in a later judgment, the High Court partially sided with IRCTC, quashing a portion of the award and upholding a smaller claim of 3,200 lakhs.
So a partial victory for IRCTC.
Yes, but they weren't content with just a partial win. They've appealed to the divisional bench of the Delhi High Court, and the matter is currently pending. So as you can see, IRCTC is navigating a complex legal landscape.
It's like a legal thriller unfolding.
Yeah.
And the outcomes of these disputes could significantly affect their bottom line, right?
Absolutely. These legal battles are creating uncertainty for IRCTC. However, it's important to remember that they are also proactively looking towards the future.
Right. It's not all doom and gloom. They're investing in technology and exploring new avenues for growth. In fact, the analyst questions specifically ask about their use of technology to enhance operations and customer service. What are they doing in this realm?
They're not just sitting back, that's for sure. They've embraced technology in a big way. We're talking online food ordering, digital payment gateways, AI-powered chatbots, all aimed at making your travel experience smoother and more enjoyable.
I've used their online food ordering system myself. It's super convenient. You can pre-order your meal and have it delivered right to your seat. No more scrambling for snacks on the platform.
Exactly. And these tech-driven initiatives are likely contributing to their revenue growth, especially in the internet ticketing and catering segments. It shows they're adaptable and willing to innovate.
So while these legal challenges are definitely something to watch, IRCTC isn't letting them hold them back. They're pushing forward with new ideas and innovations.
That's a great observation. And it's reflected in their management's outlook for the rest of FY25. They're cautiously optimistic, banking on the continued growth of domestic travel and the success of their ongoing projects.
So it sounds like they're not just weathering the storm, they're actually finding ways to thrive in it.
That's a great way to put it. They're facing these challenges head-on while also keeping their eyes on the future.
We've covered a lot of ground in this deep dive. We've explored IRCTC's impressive financial performance, delved into their diverse revenue streams, analyzed their profitability, and untangled those complex legal challenges.
We've seen how they're managing internal costs, navigating external pressures, and making strategic decisions despite the uncertainty.
But before we wrap up, I think it's essential to connect all of this back to the bigger picture.
You're absolutely right. IRCTC is a major player in the Indian tourism and catering landscape, and their story is intertwined with the larger trends shaping these industries.
So, let's bring it all home for our listener. What are the key takeaways they should remember from our deep dive into IRCTC's Q2 FY25 financial results?
First and foremost, IRCTC is a financially sound company. They're showing strong revenue growth, especially in internet ticketing and catering. They're also making waves in the tourism sector, even with the challenges facing the travel industry. But those legal battles are looming large. Their resolution could significantly impact IRCTC's future trajectory.
It's a dynamic situation,
Yeah.
and the stakes are high. But as we've seen, IRCTC isn't just standing still, they're adapting,
Yes.
innovating, and finding ways to thrive in this complex environment.
It really highlights the resilience and adaptability of this company.
Absolutely. So to leave you with a final thought, something to ponder as you go about your day, Olega, how might the resolution of these legal battles reshape IRCTC's future? And what opportunities could emerge for them in this rapidly evolving Indian tourism and catering landscape?
Those are the million-rupee questions. Imagine the possibilities if they could fully capitalize on those increased license fees, clear up that input tax credit issue, and put those profiteering allegations to rest.
It could free up significant resources for them to invest in even more innovative projects and initiatives.
Exactly. And it's not just about overcoming obstacles. Think about the trends shaping these industries, the increasing demand for digital solutions, personalized travel experiences, and sustainable practices. IRCTC is already dipping their toes into these waters, but imagine if they could fully embrace these trends and become a leader in these areas.
They could solidify their position as a forward-thinking company and unlock entirely new revenue streams.
It's an exciting time for these industries, and IRCTC is right at the heart of it. The choices they make today will determine their success in the years to come.
So keep your eyes peeled and your ears open, because this is a story that's far from over. This has been The Deep Dive, and we'll see you next time for another insightful exploration.